first off, give us a sense, quantify for us the impact from COVID-19 for your company. And you talked about being optimistic. How quickly will that reversal come?
Well, we're just in the last 1 year, we've seen what's happened all over the world. We are fortunate to tell you that we did 3.5 million square feet of leasing last year, in the last financial year. We saw traction rise for commercial real estate, which is purely driven by technology companies. Of course, the second wave of COVID has disrupted and paused that activity for the moment, but we are fortunate to tell you that things have stabilized a lot and the vaccination drives are picking up really strongly. And we see that once most of the working force within the large urban Indian cities are vaccinated, you will see a very different story on the ground.
Break it down for us. In terms of rentals, for instance, are you looking at companies trying to make a quick exit? What's a trend that you're seeing right now?
So it's like this. India's commercial real estate story really is 2 decades old in terms of real volume and grade A assets. 90% of that is taken by technology companies, and 90% of that is global technology companies who are using India for their technology information with human resource available at really marginal cost to be able to deliver technology to the world. So we've seen in the last 6 months, massive amounts of growth in terms of employment and their revenues because they're servicing the globe, and we're seeing growth there. Having said that, the rents are sub-dollar in pretty much every major micro market in India for that grade A commercial real estate. With rents being less than 3% of your operating costs, you're not really bothered about the rent number. You're more concerned with the 97% revenue. And if you're getting that, you want the space and you want people on the desk, because data security is a big risk if you're going to continue to work from home, especially in India, because you have these large companies with large number of people who are young techies who have migrated and are living out of smaller rented accommodation apartments, but the infrastructure is not all that great. You don't want to risk data security. You want them back on the desk. So we are seeing that not pressurizing rent at all.
Vinod, tell me, how are yields though? I mean, this is going to be this is crucial and perhaps a metric that we should look at closely. How are yields doing historically?
So if you look at REITs in India, they're at their infancy right now. You just have 3 REITs listed. Of course, this market will really grow. So we were able to deliver a 7% yield to our investors for the last financial year. And we continue to see that kind of stability in the returns going forward.
Well,
and this is distributable dividend, which is pretty much tax-free.
Absolutely. Vinod, I want to get a sense of how you see the whole space developing, as many people talked about the whole work from home move actually becoming more and more permanent. Is that, do you think, something which was overblown?
See, it's like this. At this point in time, even if I keep a $100 bill on every desk, people will not come and sit and work on it because they were feeling unsafe to step out. But we've seen that once the vaccinations have actually got administered, everyone's wanting to get back to the workplace because we've seen the challenges while you've been resilient to deliver services. You've seen massive challenges around managing work from home. So we are very, very confident you will see a lot of people back on the desk and growth back onto the workspace, because I don't think there's any other alternative. You may have a hybrid mechanism, sure, where you may have 10-20% floating around, but predominantly once you're back to the workspace, you will be back to the workspace with a bang.
Vinod, how are you planning to grow in the future? Will it be more inorganic, perhaps?
So we have enough and more growth possible within our REIT in terms of our portfolio for more development. And also, we have ROFO assets of the sponsor group, which we are focused on to bring on the board, to bring in as development. And we're looking at inorganic acquisitions, because right now is the time where grade A companies who have asset management experience are able to actually look at these opportunities far more strongly for brownfield sites.
Okay, Vinod, while we've been talking, actually, Emirates REIT has sold half an office floor in the Index Tower for what, something like $10 million US. Do you see divestments in your space and in Mindspace itself as well, and using that money, of course, to fund further expansion in other areas?
Sorry, I missed that question.
I was saying we just had Emirates REIT sell half an office floor in the Index Tower there for what, $10 million US. I was just asking whether you actually see divestments taking place in your business and using that money to invest in other areas.
So right now, for the next 5 years, we're really focused on growing India. You have about 300 odd million square feet of organized commercial real estate in India across. And you see between 30 and 40 million square feet getting leased to tech companies alone every year in India. And that's what we want to focus on. We want to be dominant players in these micro markets where this business emerges, while we look at other opportunities a little later.